Would you short a stock with a high PE ratio? It could work, but you can't lead with that. In the next clip from our Analyst Academy Office Hours, Brett discusses shorting stocks with high valuation.
Kind of like this mystical thing in short selling where if you lead with valuation, you just like always get your ass kicked. So valuation shorts are like, for any practitioner, if you walk into a hedge fund and pitch a valuation short, you're gonna get like shouted out of the room. So valuation should always be a secondary or tertiary component of a short thesis, I would argue. The focus should always be on something going wrong in the business when valuation is a secondary or tertiary component. Now, that's not to say, again, this is nuance. We have to be intelligent people, not, brain dead, tape chasing monkeys like many investors are today. We have to carry nuance in our minds to be effective investors. Valuation does matter, right? If I have one business that's a 10% free cash flow, durable business, it's probably not going down 90% as a short, right? Because then it'd be trading it, one times free cash flow and buy back all the share count in a year. Or if I have something that's trading 15 times sales with no profitability, if something goes wrong, that stock is in trouble, right? So valuation tells us about potential asymmetry of the trade. It doesn't tell us that it's a good short. In fact, the shorts on Palantir who shorted it on valuation just had their face ripped off with a double, right? And so with high valuation shorts, after making a few dumb mistakes, I adopted a much more tactical lens, right? Trying to find situations where there's a print and I expect there to be an issue manifest on this print. So you can capture that. And often in shorts, you make 30% of your money in one day, 40% of your money in one day. Where long alpha is made over months and years, short alpha tends to be more event oriented. And so rather than just saying Palantir is expensive, I'm going to short it, maybe you have a 50 bip short, but then you size it up around that print. That's much more of the practitioner mindset around shorts. And there's a number of other overlays that are help. This is where like quant models are helpful, or quant signals, where there's kind of low business quality, volatile profitability, broken momentum. There's other sort of tactical signs that help people thinking about the entry point on shorts. Momentum's a big one, like high valuation and broken momentum. Usually I'll want to see broken momentum in a really expensive stock to start pressing a short. Again, learned that the hard way. Shorting a stock that's up and to the right like this with positive momentum and a retail narrative, that's a good way to get absolutely destroyed.